Whoa, now welcome back to another episode of Where the Money At, where we like to dive into asset classes and figure out where the real money at and how really to get to it. And you know we focused on cryptocurrency right now. So today we're going to talk about the BlackRock ETF, the benefits of DCAing, and we're going to talk about crypto winter. Are we moving past it or have we even started yet? So let's get right into it. Let me share my screen real quick. So let's get into the price action. Bitcoin is sitting around 26.6, 26.7, and it's had a pretty nice rebound based off of the good news that we got from BlackRock filing for an ETF and Fidelity possibly following along with them. We got Ethereum sitting at about 1730. BNB, even with all the issues that they've been going through, it's been maintaining pretty well, still sitting at $240. But we're not going to get into the actual price action. If y'all want to get into specific coins, then just let me know and we can do that. But let's just get into the local price action and kind of see where we're going in the near term. So of course we're still sitting at about 26.7. And if we go into this channel right here, which is kind of on a down channel, we're going between about 31,000 and 24,000. Now, with these type of channels, I've seen them break up, but I'm gonna be honest with you. I believe that we're gonna take another leg down. If we don't, cool. You know what I'm saying? I'm not a trader, so the daily action and stuff like that doesn't really matter to me. But there are two fib numbers that I want to look at, and we're going to start from the all-time high of 69,000 to about the local low of about 15. And you can see we're sitting, from since June, we've been ranging in between the 153 and the 236. And briefly, we went above it, above 28,000 to try to turn this resistance into support, but we broke back down, which is a failed move, and we're still on this long-term downtrend. So, from what I believe, I believe we're going to range into this red area for a little bit longer. And there's another fib I want to show you from the local low of about 15, 16 to the local high of about 31,000. We're sitting in this golden range between the 382 and the 236. And it's looking like, I'm gonna be honest with you, the top of this range is matching perfectly with it. So we could bounce down. So with all that being said, that's why I believe we have a little bit more room to go down, but we could pop up because y'all know these two lines between 48 and 16, and I just believe we'll stay in there until we face new all-time highs or new lows. But let's get into it and let's talk about the BlackRock ETF. Now, we all know who BlackRock is, one of the largest asset managers in the world. I believe the largest asset manager in the world with about $8.7 trillion in assets under management. And how the ETF specifically works, you can go check out other videos for that. But from what I believe about this ETF is they're going to have the actual asset that's backing it. So they're going to have to actually have the Bitcoin that's backing it and not just spot checking the price. But, all of that doesn't really matter. The thing that we constantly talk about on this channel is the more and more financial products that are going to be created in the future based off of Bitcoin and this asset class. And, once Bitcoin starts to get added to financial products, they're going to be Ethereum financial products. And then it could get into other altcoins, which is just boost the visibility of this asset class. And all it'll do, especially with a player like BlackRock getting into it, and now there's rumors that Fidelity could follow along with it, it's going to be more exposure, more opportunity for institutional capital to get in, and more opportunities for other assets to make their way into these financial products. And all that does is just give me more and more confidence that the next bull run is going to be something that you want to be a part of. It's going to be something that I want to be a part of. And none of this is financial advice, but that's all I'm saying. If a big player like BlackRock gets in, and I know if you've been in the space, you've seen about all the other ETFs that got denied. BlackRock's probably not gonna shoot their shot unless they know they got it, and if they get it, I believe it'll start a trickle effect. I mean, we're already hearing rumors about Fidelity getting in, and Fidelity is no small player. But that's that. So let's get into the benefits of dollar cost averaging. And I ask myself all the time, what if I'm wrong about after the Fed cutting rates? Cut right here. What if I'm wrong about that large percentage drop that's happened the last 3 times they did it? What if it doesn't happen this time? Am I banking on that? No. And if it doesn't play out like that, am I going to lose all my money? Am I not going to be able to profit? No, because I dollar cost average. Now, what is dollar cost average? Everybody has their own definition. Mine is just periodically adding on to your positions throughout the bear market. So not financial advice, but I added a little bit around here when we came down here. I added a little bit around here when we came up here. I added a little bit more around here. Because what are the biggest fears when it comes to getting in and out of positions? The price taking off before you have an opportunity to get in, and the price going down when you have profits already locked in. There is no way that you're going to be able to time the exact bottom and time the exact top to get the maximum out of either one. So the most mature thing you can do is dollar cost average in and out. So dollar cost averaging for me is not buying 200 here every week for this coin, this coin, this coin. It could be, but that's not what it is for me. Just whenever I feel like I'm in a good position to where I can get in, and I feel like the future number for that coin will be higher, I'll be good. So for example, if you didn't get in during the best and lowest point, if you got in a little bit around here and a little bit around here and a little bit around here and a little bit around here, by the time we got to here or here or here, none of that shit mattered exactly where you got in. You made a profit. So the point is for me is just making sure I'm staying locked in and having dry powder on the side, saving up enough money, not overextending myself to invest in this class, but doing what I have to do to get that bag to put in and getting in. And from that, let's get into crypto winter, because I feel like a lot of people feel like coming down from the all-time high of 70,000 to where we are now at 26,000, people are talking about crypto winter's been hard. It's been hard. It's been tough. Me personally, I don't feel like it's even started yet. I feel like we have lower to go, and especially if we get around this area, which y'all know this is the area I'm comfortable getting in at. If we go lower than that, I'll have big bags to put in and build bigger positions, not financial advice, because I feel like we have a time where we come down from the all-time highs, go flat, and then we take a real big dip to really start the crypto winter around this area. So I feel like we've been coming down from the all-time highs. We're starting to consolidate and get a little flat, and then I think we're going to take a larger dip down. And I'll be adding on until then, and I'll have a huge bag to add on if we go down here. And what I was saying earlier about if I'm wrong and we don't take that huge dip, look, all that huge dip is for me is the last big move before the price changes and starts to go in a new direction, where we start going from bearish to bullish. And if it doesn't happen, but in the past it has, but if it doesn't happen, okay, cool. I've DCA'd and I've got my positions. But if it does, trust me, I'll have a pretty big bag waiting on that drop to happen 6 to 12 months after the Fed starts to cut rates. But, that's all we're going to talk about today. And I appreciate y'all rocking with me. And let's get to this money. Stay locked in, because I promise you, the longer you locked in, the more confidence you're going to build. And it's going to make the bull run that much better. Later.